Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, it looked like it will be a subdued session, but for the better part of the session, we were in the red. But in the second half, we saw a good recovery. In fact, the Nifty recovered 100 points from the day's low, settled above that 25,200 mark, 70 points up from the day's low. Sensex as well, it was somewhere around a 63 to 64 point kind of gain, ended around that 82,630 mark. The broader end of the markets were flat. Nevertheless, they did clock in gains for a third straight session. Also, the advanced decline ratio skewed in favor of gainers. But in terms of Bank Nifty as well, we saw a good recovery from the day's low. In fact, the Bank Nifty was around that 57,200 mark. At one point, settled above that 57,150 mark. PSU Banks deserve mention because, in recent times, PSU Banks have been faring better than the private sector names, and today the PSU Bank index was fired up 2% or thereabouts. Of course, the government is looking at a lot of reforms when it comes to the PSU banking sector, which is why the index was fired up, 2% gains taking the lead. Aside of that, what did well were the likes of IT, saw buying today, FMCG as well saw buying, but autos started the day on the back foot, but staged a good reversal to edge back into the green. So, auto names like M&M were among the top gainers once again today. So, in terms of gainers, aside of M&M, you had Wipro. Numbers come out this week. The Wipro stock was up 2%. SBI, we'll be talking about SBI in greater details. The QIP is likely to open today, 25,000 crore rupee QIP. So, that stock was up almost 2%. Tech Mahindra ahead of earnings, that stock was up somewhere around 1.5%. Nestle, Infosys, Adani Ports, even Asian Paints ended the day in the green. On the flip side, what didn't do all that well were once again some of these NBFC names like Shriram Finance. In fact, that stock was the top Nifty laggard, followed by Eternal, second straight day of losses. Sun Pharma, Tata Steel, Cipla, Tata Motors, Bajaj Finance, Bharat Electronics. Hero Moto, that was the top performer yesterday, came under a bout of profit taking today. That stock was among the laggards. But metals as a pocket were under pressure, given the fact that the dollar index has been gaining strength, in fact, gained for a 10th straight session. And, of course, that doesn't bode well for metals. So, that's why you saw some of these metal names under pressure. But Yatin, good recovery. Still, analysts say that unless 25,500 is cleared decisively, you cannot really call this an uptrend, so to say.
But I think the markets has been range bound. Global things are also not looking that great. But yes, today we saw low levels getting protected. Clearly the bulls are in charge. Advanced decline ratio almost 3:2. And the mid-caps, the PSU banks, were doing well in trade. In fact, if you look at the mid-cap end of the markets, a lot of result reactions, a lot of exchange reactions, which is good in a way. So, overall, the market activity remains good, especially in the mid-cap and the small-cap index.
That's true. And would you like to take us through some of the movers then, the key ones?
So, if you look at Network 18, and, disclaimer that this is the Network 18 Moneycontrol owned brand that you are looking at. However, if you look at the Q1 numbers, turnaround quarter, the stock was up 14% in trade. Patanjali, also one of the top Nifty 500 gainers, 7% higher for that one. Metropolis, Sierra are the other stocks which are doing well. What was not doing well is Just Dial and Newland Laboratories. That stock saw 4-5% profit taking. Ola Electric also fails to cheer up. That stock was yesterday down, today also down by nearly 4% in trade. Clearly, stocks like KIMS, NAM India, RBL Bank, Schneider, Ramco Cement, all of these stocks now stand at fresh 52-week highs.
All right, that's about all the mid-caps movers, in fact, in trade today. But let's shift focus and talk about all the stocks that are on our radar this afternoon. The big one, SBI, that's on my radar, given the fact that it is set to launch the 25,000 crore rupee QIP today, according to sources. Now, if the bank raises 25,000 crore rupees via this route, it will be the largest share sale through the institutional route. In fact, last the bank raised funds via QIP was back in 2017. I think it was a 15,000 crore rupee QIP. Now, this will be the first one after that. And if you talk about the 25,000 crore rupee QIP, the board had given approval back in May, and it stands valid for 12 months. Talking about the QIP that is likely to open today, it is likely to offer a small discount to the current market price, somewhere around 2 to 3%. The pricing is likely to be around 790 to 800 rupees per share. That's according to sources, of course. And LIC is likely to be a key participant. It is likely to be the anchor investor and bid for somewhere around 7,000 crore rupees or thereabouts. There's been strong interest from domestic institutions as well, and if sources are to be believed, they have shortlisted 6 banks for this QIP: HSBC, Citi, Kotak, Morgan Stanley, ICICI Securities and SBI Capital. Now the capital raise is aimed at strengthening its capital base and not really fund growth. Now it is aiming for 12% tier 1 ratio and 15% capital to risk weighted assets ratio by March 2027. Now as of March 2025, SBI CET1 stood at somewhere around 10.8% and its CRAR was at somewhere around 14.25%. Another development, I think the board has also approved a fundraise of somewhere around 20,000 crore rupees via bonds. So yes, that's about SBI. The stock was among the top Nifty gainers today, 2% gains, and fired up the entire PSU Bank index as well, Yatin.
Absolutely, and SBI, let's see when is the QIP. Most probably today evening it gets launched. 25,000, a great sum to look at the capitalization of balance sheet. Also, we have the NSE IPO and probably the stake sale of Yes Bank, which will get more capital for SBI for the entire financial year.
That's true, and if you look at the gains for the stock, Yatin, on a YTD basis, it's up just 5% or so, and still away from 52-week highs. But who knows? We may, and of course, we are talking about all the reforms that the government is also looking at, so could provide a leg up to the entire PSU banking sector, and with this QIP, perhaps. We could be looking at higher levels for SBI as well. But Yatin, which is the stock that you are talking about today?
Yeah, so today a lot of stocks to discuss, but clearly today a lot of result reactions are in focus. HDFC Life, ICICI Pru, we also had a lot of other insurance companies which are lined up for the numbers. But first let's talk about HDFC Life, and we have buy calls coming in from brokerages post the quarterly numbers. Remember the fact that the stock has already run up quite some bit, and hence you couldn't see a big reaction in trade today. But HSBC is positive on the stock of HDFC Life with a target of 900. Morgan Stanley has a target of 840, and they believe that the Q1 results were in line with expectations. However, we have seen customer addition, distribution expansion, which will drive the growth in the next 2 financial years, according to HSBC. And Morgan Stanley believes that the result quality is quite strong. In fact, they've maintained the 17% FY26 value of new business growth forecast, which probably augurs well. Obviously, margins will be range bound according to the management. But yes, post the numbers, we have seen a healthy reaction to the shares of HDFC Life. Given the fact that stock has already run up, is at multi-year high. Results were much better than what the street was anticipating in the context of what exactly is happening in the entire insurance sector.
Okay, and the stocks at one point in time were were actually looking at regulatory issues as well, right? Yes. But that has kind of abated, and at least on a year-to-date basis, the stock has done fairly well. Perhaps that's why there are some valuation concerns when it comes to HDFC Life. But let's talk about some other stock then that was in news. Dixon Tech saw a good up move today. Newer revenue streams opening up for the company, given the fact that it has or it will acquire 51% stake in QTech India, and with this, it will foray into camera modules. QTech India, in fact, has a camera module manufacturing capacity of nearly 4 million units per month. And aside of that, it has also formed a JV, a 74-26 JV with Chongqing Yuhai for enclosures. So with this, it has entered precision components via the 74% JV with Chongqing to manufacture enclosures. Now, after this development, CLSA has come out with a very bullish report on the stock. In fact, it calls the stock a high conviction outperform, and the target price is at 19,000 rupees, which implies a 20% upside from yesterday's close price. Now, CLSA believes that the steps that the company has taken to boost smartphone value addition via camera modules and enclosures bodes well, and it will lead to value addition which could rise to 45 to 55% from the current 15 to 17%, along with the earlier JVs that it is in. Now, this particular development is expected to add 150 to 200 basis point to margins and also opens up new revenue streams via external sales for the company. Nomura also has a very bullish target. In fact, it sees an over 30% upside on the stock from yesterday's close price. It has a buy rating. It says that the development, the foray into camera modules and precision components actually adds value. It will be margin accretive as well, and it is expected to boost earnings per share by 5% going forward. So it is the move that the company has made is strategically sound and earnings accretive according to Nomura. But the stock has had ups and downs, Yatin, right? It saw a fair bit of correction, till last month. Although last quarter the numbers were very good, but because of valuation concerns, the stock saw a very good correction, a very deep correction after the numbers. In fact, till last month, brokerages like Phillip Capital had sell calls on the stock, and they had scaled down their target price quite considerably as well. YTD as well, the stock is still down 10%, although it is a multi-bagger stock. There's no denying that. But valuation concerns have been at the fore. But with this development, perhaps this opens up the door for some bit of an up move coming in, as other brokerages or global brokerages have charted out higher target prices. Let's see how things really pan out, because the mobile PLI scheme also ends next year, and there are competition concerns as well, and there have been concerns over delay in production with Vivo as well. So all these concerns were there, but with this newer revenue streams, who knows, we could be in for some bit of re-rating when it comes.
And I think the promoter also recently, I think last month only sold shares worth 2,200 crores, and I think Motilal Oswal Mutual Fund bought those shares. After that, the news flows have been at least positive, and today's announcement of backward integrating when it comes to mobile component, display components, even those biometric recognition systems is something which is on the company's radar. So clearly, for a company of this scale, backward integration does matter, because that will get scale, that will get margins according to brokerages. So let's see how the stock really moves into earnings. But yes, as I mentioned, promoters have sold recently, and as Nandita was pointing out correctly, that valuations have been quite high for Dixon. It has been like that for quite some time. But yes, there are big brokerage views on the stock with respect to valuations only.
That's true. Yatin, we're also waiting for Tech Mahindra numbers later today. Just quickly take you through the expectations. Constant currency revenue is expected to decline anywhere between 0.5% to 1%. Of course, we saw in terms of constant currency, TCS, had a pretty bleak quarter, 3.5%. They've started FY26 with almost 3.5% decline in constant currency revenues. Not so bad for HCL Tech. For Tech Mahindra also, it's expected to be around 0.5 to 1% decline. Dollar revenues are expected to rise. PAT is expected to grow on a quarter-on-quarter basis. But commentary on telecom recovery and margin roadmap will be in focus. Remember, the company is aspiring to achieve industry-leading growth and in excess of 15% margin by FY27. Whether the company is on track for that or not, management commentary on that will be watched out for. But here as well, there have been valuation concerns. Yatin, a lot of brokerages have already downgraded the stock, and the stock has actually outperformed other peers if you look at the YTD performance as well. But let's see how numbers pan out, because for IT, the numbers have been fairly mixed to bleak, so to say. But let's see how things go with Tech Mahindra as well. So yes, we're waiting for those numbers, but those were all the stocks on our radar this afternoon. Thanks a lot for tuning in. We'll see you tomorrow morning with the markets. Stay tuned to Moneycontrol for all your other news and updates, and we'll catch you tomorrow. Thank you.